Good evening, ladies and gentlemen. We would like to start our session on the regulation of Switzerland and EU, the European Union. We have quite interesting group of speakers today who come to us from actually not only Switzerland but London and Germany. And we have also online one more colleague of the group of our representative from Clifford Chance today. And I would like to thank you actually for giving us this idea and organizing event, because actually because of your initiative, we decided to talk about it more and educate our members in Crypto Valley Association. I just would like to ask if we can hear if online we have a good sound, because we decided to not use microphone in this way.
And also here in the audience, can you hear properly, or should we use the microphone?
And for the online?
A little bit louder.
Louder, yeah? Okay, I'll try. So my name is Ekaterina Anthony. I'm board member of Crypto Valley Association, and I will moderate our session today. Here in Switzerland, we have quite a good regulation. We know about it, but we would like to discuss it again today, and maybe from more new perspectives, because we have a lot of events going on globally nowadays. But of course, we want to compare it and see what are the benefits for our clients in Switzerland, for companies in Switzerland, to work with other jurisdictions which are not far away. We have European Union with the MiCA, which I personally still have no full understanding what's going on there. And we have UK regulation. So let's go deep, let's do deep dive into these questions and understand better how we can benefit and what are the future for the crypto industry. First, I would like to introduce our I would like our guest to introduce themselves, and with that, Andrea.
Thank you very much, Ekaterina. So my name is Andrea Schuss. I work for the Swiss firm MLL. I've been working there for 5 years, and my background is in financial regulation, crypto, and fintech.
Thank you very much. I'm Emil Gutwenger. I'm a senior associate in the regulatory team of Clifford Chance in London, and I also work in crypto a little bit and lots of other regulatory areas.
Hi everyone, my name is Diego Ballon. I am based in London. I used to be a regulator. I used to work for the UK FCA and have been with Clifford Chance for about 7 years now. I'm one of the lawyers who spearheads the digital assets and fintech initiative from London. And in that context, I focus very much on regulation of crypto asset services providers, but also the regulations around digital securities and digital assets more generally.
Yeah, my name is Clifford Chance. I'm a financial regulator at Clifford Chance based in Frankfurt. And also one of my key focus areas is the regulation of digital asset service providers, including assets. The major topic in these areas of the industry of assisting clients to access the German market, and receiving the bargaining.
It's actually great that we have experience even with the regulatory bodies that we can talk about different perspectives, right? Not only from legal, like we can explain the law, but we also would like to understand what regulators think about, how we implement it. And we also have online Alexander Tollest, Counsel, Clifford Chance Paris. Unfortunately, he cannot join us today, but he is online, and we will also give him floor for to discuss French situation with crypto regulation. And we just had a short discussion between us before the start of this session, and we decided let's first cover security, because it's quite a big topic. Me personally, I have a lot of questions. Because let's say if I'm producer of wine, I don't know, producer of wine in Argentina, can I come to Switzerland and tokenize my wine here to issue shares, back shares, and sell it in Switzerland? Or I will be really limited what I can do. it's just example from my head, but maybe for people who listen to us, it will be some ideas what actually about the security regulation. And let's first focus on Switzerland. And I suggest again, Andrea, you start. Just what are perspective, what can we do with regulation, and what are next steps, and how we can probably list securities in Switzerland.
Thank you very much. It's a good question. So in Switzerland, last year, a new law entered into force that allows for the tokenization of financial instruments and rights in the form of so-called ledger-based securities that can be issued directly on an underlying ledger and transferred on that ledger. Now, the question is, how do we create such a ledger-based security? So the parties, the issuer who wants to issue a tokenized instrument, and the first acquirer needs to enter into a so-called registration agreement, where they agree that the right is entered into a ledger and that it can only be transferred and exercised on the basis of that ledger. And then the law gives some guidance on how the ledger needs to be structured so that it is an eligible ledger. It's a bit technical now, but it's really important that we understand this. So the first requirement is that the ledger gives the investor or the creditor the power to dispose over the right and not the issuer. The second requirement is that the ledger is protected from unauthorized modification. And this is really the question of how decentralized the ledger has to be. And there in practice, we have seen permissionless blockchains used like Ethereum, but also and then we've also seen permissioned ledgers as an underlying blockchain that works as well. And then thirdly, there are certain transparency requirements, meaning that the content of the right that is to be tokenized, such as for a bond, for example, the amount of the debt, the maturity, etc., and then the registration agreement and the functionality of the ledger are recorded in the blockchain itself. Alternatively, it's also possible to link that data to the blockchain, if that's possible. What we have seen in practice is that the smart contract that mints the tokens contains a link that goes to a website that contains the registration agreement, or the documents can also be hashed in the smart contract. And then lastly, the investor needs to be able to check the content of the ledger that concerns him and verify its integrity. So these are the technical requirements that need to be implemented with regards to the ledger. It can be on the layer 1 blockchain or also in the smart contract. And then lastly, depending what right is to be tokenized, there are different requirements. So if a corporation in Switzerland wants to issue tokenized shares, then the articles of association need to contain language that allow for the tokenization.
Thank you, Andrea. Just a question, but if the company is not based in Switzerland, for example, but they would like to have tokenized shares of the company or of the product they produced, like linked to the somehow security which will be backed by something like we just suggested, it's a wine. Do you think it's possible to organize it in Switzerland, or they first need to create a company?
Yeah, again, I think it depends what exactly they want to tokenize. If it's I don't know, if it's wine that they want to tokenize, then we usually recommend them to have a company in Switzerland that is established there and then go through the process, or at least have the wine located in Switzerland so that the Swiss rules apply. And then there's also the question, where do you list these shares, these tokenized shares and bonds? And in Switzerland, we have now the sixth digital exchange, which is a fully regulated digital exchange and central securities depository, where it's possible to list tokenized shares, but there it's only possible for Swiss entities. But for bonds, for example, it's also possible to list bonds that were issued by non-Swiss entities. So, for example, UBS last month issued a bond in the amount of nearly 400 million and listed it on the sixth digital exchange.
Yeah. Okay, the conclusion is that we need to create substance in order to have benefits of the Swiss regulation. It's not like you just can come here and list something immediately without creating some legal presence. We can maybe come back a bit later to this topic because maybe people have questions, because I just got from my head example about wine, because I think we will have some wine later. But of course, it will be good if people ask some questions, because we have really experts and really focus on the subject. We know what we talk about. And now I would like Alex, who is now in Paris, to give us the overview of what's going on in France, because we know that you have limited time to be with us. And why don't you share with us your thoughts, and we let you go after. Yeah.
Great, thank you, Nikki. Well, I hope that you can all hear me well. So yes, I've been in France now for a good 7-8 years. I'm actually English, so I can be objective. It's been a fascinating time really to be out there, because France has tried to lead from the front in terms of crypto regulation. As you might be aware, MiCA has actually been designed to a very large extent on the French regime. And they, back in 1929, they actually introduced a category of digital assets, which had just until then really been seen in the sort of AML world. What they did obviously was have the registration requirements. So they said that if you want to offer services in relation to digital assets, then you may need to get a license from the MF, who the French regulator. This was mandatory in certain respects. So if you're involved in the custody of digital assets, if you're buying and selling them against legal tender, or if you're trading them, then you need to get a license. And if not, you can get a voluntary one. But anyway, that's for another time. And if you have any questions on that, please do reach out to me. I'm actually here today to talk about something different, which is digital securities in general in Europe. Now, perhaps take a step back and look at why would one want to issue digital securities. Well, there are two main advantages. The first is that the less exciting bit is the safeguarding of data. It's a better way of storing data. You're going through a central server. You've got no risk of a central point of failure. And you also have the advancement of transparency, because you have a permanent record that can't be changed and so on. The second advantage, which is really exciting, is what you can do with the cash leg. So this is the fact that you can automate payments. You can potentially have payments going directly from the issuer to the digital wallets of investors, rather than down the cascade where you go through the paying agent and the clearing systems and down and so on and so forth. That also entails perhaps reduced settlement cycles. So that means that issuers can get hold of their money much quicker. In the sort of normal benchmark bond world that I work in, it could often be 5 days between pricing transaction and the issuer actually receiving the funds. So using DLT in the settlement process can potentially mean that you do everything on the same day, which is a huge advantage for certain issuers. So in terms of how these digital securities are regulated in Europe, I say it's uneven across member states. So Luxembourg, Germany, and France are the classic examples of jurisdictions that have already evolved to allow digital securities to be issued. And other jurisdictions such as such as Spain are a little bit further behind. Other important jurisdictions like Italy, in fact, probably wouldn't allow you to do a digital securities issuance. So it's certainly a work in progress. And then at the European level, there's a recognition that some of the legislation that applies to digital securities issuances, such as MiFID and CSDR, is somewhat incompatible with digital bonds. And that's why they've come up with the EU pilot regime, which will be live from March of next year, and which Diego knows very well and can talk more about. But the idea is to allow applicants of DLT-based market infrastructures, so that's trading venues and settlement systems, to disapply certain legislation which the Europeans have deemed to be incompatible with the use of DLT. Notably, there's, for example, a restriction on digital bonds being listed and admitted to trading, which certainly affects their liquidity. In terms of concrete issuances, well, Santander, which is a Spanish bank, and Societe Generale, a French bank, have led the way with their issuances. But the landmark issuance in Europe really was in April 2021, where the European Investment Bank did their first issue of digital bonds. And just last month, the EIB had closed a second transaction, which we were delighted to be involved with, advising the EIB. And that had a number of innovations. So the first one was the fact that it's the first euro-denominated digital bond that used private blockchain technology. The second was the first time that Goldman Sachs's tokenization platform had been used, and the hope in the industry is that Goldman Sachs, being such a big name, will certainly attract other issuers in due course. It was the first syndicated digital bond issuance settled on a T+0 basis. So again, this is showing that the supposed advantages can actually be translated into what we're seeing on transactions. It was the first digital bond issuance under Luxembourg law. And that's important as well because Luxembourg law is developing as a center for capital markets activity. It was the first digital bond that was emitted by a public institution to the Luxembourg Stock Exchange Securities Official List. So this is a way of increasing the liquidity of digital bonds. So even if we can't admit them to a regulated stock exchange, well, this allows investors to know that they exist and to have some indication of what price they're trading at. And the final first was the first interest rate swap on the GS platform. So what this shows is really that giant strides are being made in this market. It's attracting some really important players, and we know that the EIB are going to keep continuing with these experiments. We're even aware of corporate issuers who are looking at this. We're hearing about things happening in different jurisdictions. I know that in the Middle East there's interest in these digital bond issuances and so on. So I think, long story short, there's now a well-trodden path for issuing digital securities in Europe. The technology is ready now. There are precedents out there. Investors are aware of it. I think that for the most recent EIB issuance, there was around 40 investors that showed interest. So we certainly expect there to be movements in the coming years, and hopefully the EU pilot regime will be part of that. But anyway, I don't want to hog the limelight, so please go back to the other guests. But thank you very much, Nikki, for your time, and I look forward to listening to the rest of the discussion.
I can hear that bonds market is actually bonds market is actually growing. Liquidity, I can hear that it's good for corporate governance. I guess for auditing companies, a lot of benefits, right? The question is now, it's Alex, you said that it's about French market, and also there is a trend in Europe. But let's maybe discuss more about EU in general and Germany and then UK. So I just suggest you guys go through the regulation. What are the benefits? What are the maybe difficult moments in situation? What doesn't work? And where are the examples? Just give us also some practical examples. We start with Diego, right?
Thank you. Yes.
Thanks.
Look, and I think what's important to say is that we've got these fantastic examples of actual issuances out there. They're working, they're there, and they are creating a lot of attention. But there's still examples and they're test cases. I think what we're standing at is at the cusp of a mass adoption. So that's not happening yet. And the main reason for that is because some of the legislation in Europe is curtailing that adoption. The legislation as it was designed before was sort of focused on traditional issuances, paper issuances, and had certain requirements, for example, that securities needed to be registered with a CSD. And with the advent of these new ways of issuing securities, the question is arising as to what the role of the CSD should be and whether we can reconcile that with DLT technology. And I think in that context, the EU is making big strides because they have created this pan-European regulation which deals with, which disapplies certain European level requirements that would otherwise make it impossible for securities to be listed. Now that regulation has just been adopted and we're going through a process. In particular, that regulation enables MTFs, multilateral trading facilities, trading platforms, and CSDs that are based in Europe and licensed in Europe to apply for an additional license and operate a DLT platform in order to basically create this function of a super trading platform and CSD in one. And that enables then that security to live in that environment and to be tradable in that environment. So otherwise, you've got the problem that you have to go by private placements, and it's just simply not a scalable solution. Now, the thing with this regulation is that it just came out and it needs to operate together with the local laws in member states. And then maybe, Christian, you can talk to us about the German example. But the point is that every member state has a base requirement and formalities around the issuance of securities, and those need to be reconciled on the national law because European law sits on top.
Yeah, thanks, Diego. So basically in Germany, what Diego just alluded to, the registration is really the key aspect when it comes to issuing digital securities. So in Germany, we had, I think 2 years ago, the German legislator introduced the Digital Bonds Act, which for the first time allowed issuers to issue a digital security in forms of registered bonds. Now there are also rumors about expanding this to securities, but at the moment it's just the digital bond. The interesting thing which came together with that law was really that the registration, usually when you have a security or bond, it has to be physically certified, and that certification then lies with the depository. That's not the case with under German law. You have to register the bond with a digital register, and that digital register is something which can be set up as a crypto register. It is a licensable service under the German Banking Act. So if you want to be a register, you have to apply with BaFin for a license, and you are subject to prudential requirements, capital registration requirements, disclosure requirements. But that actually enabled for the first time something to issue a bond in form of digital, which is not certified. And what Alex just outlined, the IPE transaction, the Goldman Sachs type of technology used, that was actually a register under the German Special Securities Act. And so the interesting part there was really that for the first time we had a private market participant actually being able to provide a central function based on DLT technology in Germany. And that is something which the German legislator is very keen on developing, and there are also very big demand for expanding that type of technology, for allowing actual issuers to also issue securities, not only bonds, but also securities.
Maybe to give a flavor of how this then compares with the UK, as you can tell, what we're dealing with in the EU is that you've got local member states presenting their local frameworks and trying to make them viable for the use of the technology, and you've got a higher level EU regime, which is basically removing barriers. In the UK, we've got a slightly different issue, or we've got the fundamental question around the formalities, which is at the moment sort of being considered as being not that much of a problem, in the sense that there are certain types of securities like bonds that don't have that many formalities and that could be issued digitally. That is possible under English law. There are formality issues in respect of equities. And then we still have the same problem that we've inherited before the UK left the EU, from the EU, around those measures of CSD, CSDR, and the treatment of some of the infrastructure. And the way the UK is aiming to deal with this is in a similar way to the EU pilot regime. And the UK's response to that has been to try and come up with an FMI sandbox. And that sandbox is not established yet. What we have is a power under the new Financial Services Markets Bill, which will enable the government to create sandbox regimes. Now, that sandbox regime is going to be much, much more flexible than the EU's version. It will enable the legislator to create an entire ecosystem, similar to what we've got here in Switzerland, where you can actually have everything in one ecosystem in respect of a particular use case. And that's a very, very wide-ranging power. At the moment, we are in the UK at a stage where the legislator is listening to what the market is proposing. Obviously, it's looking at the DLT pilot regime in Europe, and it's trying to see where do we stand with this. Is there anything that we can do better? Can we improve it? One of the big aspects that I think can be improved, and which is not dealt with under the EU regime, is the questions around the payment rails. So the issuance of the securities and the ability to make them work depends heavily on the ability to make the settlement with a digital coin. And I think that's the aspect that the EU framework will deal with under MiCA, which we're going to talk about in a moment. But that could be solved, at least in the UK, under the sandbox as well, in one go, which would be really interesting.
So yes, MiCA is something I have a lot of questions. So I can hear that we need harmonization, that actually each country in Europe is trying to develop their own way. And there is not like one European approach. And the question is, what does MiCA stand for here? So just give us a bit more understanding, and how we can harmonize. Maybe do we see any possibility that it will be across Europe more harmonized regulation?
Christian?
Yeah, so basically, MiCA aims really at harmonizing the various national legislation we have in place around the issuance, intermediation, and market abuse rules when it comes to crypto assets. And crypto assets within this sense of MiCA are the payment tokens like Bitcoin, Ethereum, but also NFTs and utility token. Now, digital securities, that's very important, are not in scope of MiCA. They remain within the MiFID regime and they remain within the prospectus regulation. The key elements, especially for people who are considering targeting the European market or targeting one of the member states offering services, there are, in my view, three things. First of all, authorization requirements are introduced for crypto asset service providers, so for people who offer custody services or who want to deal on an account. Second one is the issuance, the issuers. They are being targeted with respect to a white paper regime that's similar to the new prospectus regulation. And the third one is the market abuse regime, which is introduced. And why is that important? At the moment, the current situation is very split. We have, when it comes to crypto assets, we have registration requirements in some countries, or pure registration requirements, and we have like a fully fledged license regime. For example, in Germany, if you want to offer custody services in relation to crypto assets, or you want to deal on an account, you have to apply for a banking license with the German Federal Financial Supervisory Authority, the BaFin. And that was introduced on the back of AMLD5, when Germany took the approach and basically said, because not only of AML concerns, but also in respect to consumer protection, we want these crypto asset service providers being licensed. So it's basically something which MiCA introduces now, has been in place in Germany for the past 2 years. The interesting question is now for most of the market participants who are considering Germany as their market, or maybe are actually offering already service in Germany, how they actually transition into the new MiCA regime. Because one of the key benefits of MiCA is that you can actually leverage the European passport regime. That means if you have a license, obtain a license as a crypto asset service provider, and you're located in Germany or in France or Luxembourg, you can passport your activities to all other countries. And that is something which is not possible under the local German regime because it's a pure national thing. So most of the questions I get at the moment is really, how can we actually transition into the MiCA regime? And MiCA comes into force, we expect it around 2024, middle of that. And there's also an 18-month transition period for those who are actually licensed. And there's also an element in MiCA which allows the national legislator to open for a simple transition regime. So we don't have to do the full licensing procedure under MiCA, but you can do a sort of light transition regime. The interesting question is whether Germany will introduce that. Because the BaFin has so far not made any suggestions whether or not they want to do that. But if they do that, I think the key changes, at least from a governance perspective, are not that fundamental if you compare MiCA to the current regime. The moment, if you are a regulated crypto custody, you have to have a management which is fit and proper, you are subject to capital requirements, you have to have an AML function and a risk function, and these are things which are also relevant under MiCA. One of the key differences, however, is rules of conduct, for instances, or organizational setup in a way that you have to separate funds from each other. That is something which is implemented in Germany in the German Securities Trading Act, and crypto asset service providers at the moment are not subject to these requirements. So there will be a certain uplift in this regard. But the interesting question, which hopefully will be solved over the next months, is really how is the German regulator actually targeting or implementing the MiCA in Germany?
Should we not be able to? Sorry. Maybe easier.
Okay, so I will. I think I will give it to Emily because it's we will go, from Europe to Switzerland. We will finish with Switzerland, and then MiCA is EU, and then we have UK. And we have Sandbox regime, and we have FTX case recently, which influenced now probably all regulators. Maybe you look also and discuss with us from perspectives what actually happening now in UK after this difficult days the industry had recently. I guess it's not only about AML or investor protection, it's more. And also later we can compare maybe with Switzerland, with our Sandbox regime here, and with FinTech or DUT, how they correlate. Just maybe give a bit of perspective. Actually, if somebody decide to do business in Europe, UK, or Switzerland, what are the, just compare a bit, what are the benefits?
Okay, perfect. Thank you very much. So, to compare to what Christian was just explaining about all the different regimes that were in place in Europe pre-MiCA, I think in the UK would probably be on the fairly unregulated side of it. And that's basically where we are at the moment. So especially from a cross-border base, from a cross-border perspective, it would be quite interesting for all the participants here. The current situation is quite unregulated, which in respect of crypto assets. So I'm just talking about crypto assets. I'm not talking about, as Diego did previously, about digital securities. And just with respect to crypto assets, the current situation is pretty unregulated on a cross-border basis. It is possible to trade with UK clients at the moment on the wholesale and the retail side on a fairly free and flexible basis. And I'm saying it's currently unregulated because obviously we have a couple of recent developments, as you said, and also we have MiCA in the European Union. And obviously in the UK, we're also looking at what's happening in the European Union. And at the moment, we're thinking we're not going to do the same. At the moment, the approach of the government is to not be a rule taker, to look at what's happening on the continent. And then, as Diego mentioned, with regard to crypto securities, into digital securities, to adopt a similar approach, but see what could be done better and what could be done differently. And specifically with regard to crypto assets, the future trends that we're seeing at the moment is that the retail space is going to be, the retail clients are going to be protected a little bit more. That's mainly going to be done with regard to the expansion of the UK financial promotions regime, which means that the marketing of digital assets to retail clients will be limited to a certain extent, but that will not apply to on the wholesale clients. I think that's probably just the overall direction of travel in the UK. Specifically with regard to your question about FTX and how we're seeing that being played out in practice, it has sort of led to a couple of questions from the regulators, especially from the FCA, in respect to ongoing applications, where all of a sudden we keep getting questions about client assets and how crypto asset providers are sort of protecting client assets in certain circumstances, even though it doesn't really fit into the regime as it is at the moment. So in our discussions then with the FCA, we need to point out that the existing client assets regime doesn't apply as such, but that our clients are still looking after client assets and are trying to safeguard client assets on a sort of more voluntary basis. I think that's mainly what we're seeing in respect of FTX. Steve, you want to add on the Swiss version?
Yeah. Thank you. Maybe as a first remark, so Switzerland is, the FINMA in Switzerland tries to be technology neutral. So that means it applies the existing financial market laws to crypto asset service providers, and in that way doesn't want to distinguish or based on a specific technology used. So with regards to the regulation of crypto asset services in Switzerland, it really depends on the crypto asset in question. So for utility tokens, services involving utility tokens are not generally regulated in Switzerland, which is different to MiCA. Services involving payment tokens or cryptocurrencies usually fall under the anti-money laundering legislation, and FINMA applies the rules very strictly to these service providers. So, for example, the travel rule is applied very strictly to these service providers. And then, with regards to asset tokens, the whole financial market regulation really kicks in, and then there we have licensing requirements for brokerage services, for asset management services involving these asset tokens. We also have the anti-money laundering legislation, which applies for the custody of asset tokens. And we have the Financial Services Act that triggers a range of obligations for these financial services providers. So really in Switzerland, the FINMA is technology neutral, so it wants to leave room for innovation, but it also doesn't want to tolerate any abusive behaviors or circumvention of the financial market regulation.
I mean, sorry, may I react to that? Just one point maybe to highlight that is, I think, a big difference in the EU and in the UK to this. And it is that there is a fundamental policy question when you're designing a regime around crypto assets as to whether you treat the assets more like securities or whether you treat them more like money. That's, I think, the fundamental question. And if you come out in that from a perspective of a regulation, you're going to treat them more as money, that comes with consequences in terms of what the provider can do with it. Because the starting point is that if I'm holding money like a bank does, you can then lend that money out and do stuff with it.
if you're on the other hand holding securities like a broker does, there's a framework for that, and normally there is some sort of fiduciary or protective relationship which says that unless you give me specific permission, those assets are held segregated and protected from my insolvency. So there is this dichotomy between the treatment of these two assets. And what I'm hearing, and I find quite interesting, is that you said asset tokens are actually treated as securities, which makes absolute sense because they're very similar to securities. And you're leaving open the question around how you treat Bitcoin because you're applying AML at the moment. Is that right? Or am I?
So Bitcoin would qualify as a payment token in Switzerland, and it is treated, so services are involving Bitcoin really are subject to anti-money laundering legislation, but also so custody services which fall under the banking regulations that could potentially trigger a fintech license requirement.
And how's the custody requirement? Do you need to segregate them, or how do you hold them?
So if you don't want to fall under the banking license or fintech license, then you should segregate each client's assets separately on the blockchain.
Right, but if you do, then.
But if you don't segregate, then you could trigger fintech license requirements because payment tokens are treated like fiat currency in Switzerland.
And then they become part of your balance sheet. Yes.
Yes, exactly.
Right. If we go back to Sandbox, I think it's also good because we have people from startups here. Fintech is really good solution in Switzerland. It's very unique, and very often people from other EU countries, for example, the correspondent banks, you have to explain what does it mean to have fintech license, and then they understand that it's under banking law. They're really impressed because there is no equivalent in Europe, for example, for this. The limit is it's 100 millions, and you don't allow to pay interest on deposits, for example. So it's good for startups, but actually, if you really develop business, you will have to become a bank lately. But the beauty is that you only pay 30,000 minimum as a capital in requirements. Yeah. The question is for you: do you have something like this in EU and the European Union? Just to consider for people for future, if you start up, you can't become a bank immediately, right?
I think, sadly, this debate around the treatment of payment tokens that you're sort of characterizing as payment tokens in Europe has taken a turn. Europe and the UK has taken a turn whereby they all qualify as crypto assets. It's this big bucket of unbacked crypto assets. And that has the effect that you then switch on. MiCA says MiCA, but it's actually the securities framework. MiCA effectively switches on laws that normally apply to securities and holding of securities in the context of crypto assets. That's what it does. It transposes those laws and creates a bespoke regime with some changes, but the fundamental ideas are the same. And so that doesn't exist, and it's a real issue because when I'm speaking to a client who wants to, for example, enable payments or enable banking-like activities, the regime is not geared to that. It doesn't allow that with Bitcoin. It really treats Bitcoin as an investment. There is the e-money regime that has long existed in Europe, and that regime is being expanded under MiCA to enable e-money tokens. So there is an additional framework for that. And there is obviously the stablecoin regime, which applies to stablecoins. So you've got these two types of tokens, if you wish, that are electronic money and stablecoins, which are treated more like payment instruments and don't necessarily switch on that securities framework. Now, the thing with that is that e-money tokens are characterized by a debt obligation that exists between the issuer and the person who's receiving them. And so, in other words, the issuer stands behind every token that's been issued. You can't just simply, do it. So, and they need to be exchangeable one-to-one. Then the stablecoin regime that requires you to safeguard the assets that are backing your securities in a similar way, which means that for a startup or somebody who's trying to raise funds with these assets, that's not possible because they're always segregated in your balance sheet. You can't treat them as part of your balance sheet. You can't lend them out. You can't. They're sort of static and they're protected. And that removes the fundamental banking activity that you were talking about. And so that and that's, I think, the direction of travel.
Yeah, I mean, the interesting thing about the payment token and what you just said, Diego, about having them an investment purpose is that also has been the case in Germany for, I don't know, the last couple of years, even before the definition of crypto assets has been actually introduced. Germany, the BaFin took the view that, for example, Bitcoin or payment token in general, so-called units of account, that is a special financial instrument in the German Banking Act, which is usually or has been originated for payment activities. But as of today, the BaFin said, well, Bitcoins are not used for payment activities. Well, in most cases, people use them to speculate that they make money off them, to sell them, etc. So the whole interesting part of bringing them into regulation was really driven by consumer protection in the first place, making sure that the dozens of consumers out there speculating on all sorts of non-German, non-regulated platforms are not losing money. And Germany has an expensive licensing regime, meaning that even on a cross-border basis, if you're targeting the German market and you're offering actively your services into Germany with respect to Bitcoin trading or payment tokens in general, you have to have a license. And BaFin was very busy in this regard, screening the market for the so-called black sheeps and making sure that they either have a license or were not offering the service in Germany. That was not driven by payment concerns or that anything does not fall within the Payment Service Directive. It was really driven by investor protection and consumer protection.
So the conclusion is that we have to deal with different interpretation, regulation for the same things in Switzerland, in EU and UK. It makes the business more difficult to achieve, but still maybe some advice, let's say for Swiss-based financial institutions, in startups or like a small, middle-sized enterprises who already operate in crypto. What UK can suggest them if they want to expand and scale their business? What will be your advice or just ideas, business ideas for them, practical?
So I think, as I've said before, the main point about doing business into the UK is on a cross-border basis, it's fairly unregulated. It is currently fairly unregulated. It will stay fairly unregulated with regard to the wholesale market. For the retail market, if that is the specific focus, then specific strategies will need to be adopted going forward, specifically with regard to marketing. And as Christian said, also in the UK, the FCA take their investor protection objective very seriously, specifically with regard to retail clients. So going forward, the idea is that the promotion of crypto asset services to UK retail market clients will be fairly limited and will be fairly tricky to be done even on a cross-border basis. But on the wholesale side, it is fairly unregulated and it will stay fairly unregulated.
Yeah, I would probably add that so just thinking about the crypto, so you said opportunities, what opportunities are there? I think I would share that view that generally for the provision of wholesale activity into the UK, there is a reasonable expectation that will remain open. And so that interaction between a Swiss player offering services to UK, that's probably, possible. It really depends on the specific services. There are some questions, for example, around the classification of staking services, and it really depends on what it is that you're offering. I think where there's more scope to do stuff is in the context of digital securities, just because the FMI framework is geared towards that, and there's a real interest in it. And so I think that space is open. The space around infrastructure and how to use DLT in the context of financial market infrastructure. I think the UK is very, very open to hearing solutions, proposals. And, it is notable that some really new proposals, for example, omnibus accounts on central bank money have recently received licenses to operate. So yes, there is a licensing framework, but you know what is notable is that the UK is willing to grant those licenses and make them available. And so I think that's really important.
Yeah, I think what I hear from clients, not only from Switzerland but all over the world, is that Germany is a very important market for them in terms of that a lot of people want to access their platforms. So when you're a crypto trading platform, they have a real big interest. How can we onboard these potential millions of clients to our platform? And there are two possibilities at the moment now. Well, one is not really yet a possibility, but it will become one. First one is you can consider the MiCA license, or you can consider the current regime. And it's really a question about timing in the end. Yeah, how urgently do you want to offer your services in Germany? Usually the license BaFin works very efficiently, but they will test you when you apply for a license. You have to present your business case, you have to present your organizational model, and so on. So you can calculate with a licensing procedure around 6 to 10 months until you receive the actual license. Classic example, crypto custodians, there are only 5 in Germany at the moment, and the regime has been in force for 2 years now. So it's something you better come prepared at the end. But BaFin is very welcome. They openly discuss the business case with you. The FINMA president Branson is now the president from BaFin, and he has actually introduced some very useful things within BaFin. First of all, being a technological focused departments. So they brought in really the tech experts. They don't have a legal background. They don't have a commercial background. They're just focusing on IT and tech stuff. So they really know, understand the startup companies, because that has really been an issue in the past, that the fintech space was approaching the regulator, and the regulator did not understand what these people were doing in the end. They were just applying their usual law stuff. They were great lawyers, maybe were great commercial guys, but they did not understand the IT functioning behind that. That's been changed. Now there's a lot of efficiency in BaFin in this regard, and they're very inviting to market participants. Approach us, present your business model, and we help you to guide you through the process. What they don't like is, and I mentioned this here, is if you already making business with German participants. The first question in the licensing procedure they will ask you is, do you already have German customers? And if you do, you better make sure that you have onboarded them on the reverse solicitation basis. That is allowed. But they will ask for your list of clients, and they will screen them. And if you're doing business with them, you better have good arguments why you have done that in the past. But other than that, they are really welcome. They are very professional, and they are reliable. And what we see from international clients, it's almost like a brand. If you have like BaFin authorized, that is something which means in the market. The clients know that a solid regulator stands behind them and watching the crypto asset space.
I have 2 questions. The first one with respect to the BaFin license is sort of highly regarded or highly seen in this case. But with the passport, this is a bit obsolete, because anyways you have the license from Liechtenstein, you could passport to any other EEA country. There is no additional requirement for the passporting. That's the first question. And the second one is with respect to actively targets the German markets. Could you maybe a little bit give more background, because this is very broad.
Sure.
But when you, for instance, make a post on LinkedIn, somebody reposted it, targets the German markets. Where is here the bottom line? What is allowed?
Yeah, two very good questions. The first one was in relation to targeting the German market. What does it actually mean? And the second one was the passporting. Is the local license not really obsolete? So targeting the German market means actually addressing your activities actively to the German market. Marketing is a very good point. So if you are using a website, for instance, which has German language on it, which directly addresses German customers, like we offer great fees for crypto trading now, or if you making phone calls into Germany, if you're sending emails to German customers, that will be regarded by BaFin as targeting the German market. So what is not regarded is any sort of passive involvement. If the client came to you on the basis of non-prior solicitation, so whenever there has been any sort of marketing activity specifically addressed to Germany, and then the client comes to you, then the reverse solicitation exemptions off the table. But if he Googled or she Googled for himself and looking for trading platforms, and then it found the Swiss trading platform, and then approaches you and asks, please, can you onboard me? That's perfectly fine. But it's a factual question in the end, and BaFin always assesses this on a case-by-case basis. What is important for market participants in this regard is to keep evidence, which you can show to BaFin, an email, for example, which you can show where the client has asked, please, I have Googled you, or I have seen anything in the Swiss newspapers while I was traveling in Switzerland. Can you offer me the service? If you, that kind of email you show to BaFin, then that's perfectly fine.
You just formalize it with the form, like clients out outside of Switzerland, every client has form that signs it, say that he was approached
You mean a disclaimer?
Yeah, disclaimer like
no. Disclaimer is not working. It's a factual question in the end. BaFin will try to assess whether the facts at hand support a reverse solicitation basis. A disclaimer is which you put into an email, basically saying you hereby acknowledge that you have been onboarded on the basis of reverse solicitation. That's not going to work. So it's really a factual question in the end.
I have a question that is maybe Germany, but also then UK. So if you're watching the World Cup now, I mean, at least in Switzerland, every second break there is a advertising on finance for NFTs. And I mean, at least I would say that's targeting the Swiss market, because I'm watching Swiss TV and I see finance on TV. So you have then I say,
yeah, first of all, I must say I'm not watching the World Cup anymore. But I see your point. General marketing activities, which we like in Germany to refer as brand marketing, which are not addressing specific products, but the brand. That is generally not regarded as specific targeting marketing activity. So, for example, Deutsche Bank used to have that slogan, Deutsche Bank, die Beraterbank. You can do that. No product is mentioned, no licensable service is mentioned. But if you do it in a way like, say, Binance, great offers for Bitcoin, or the Bitcoin custody service provider, it's going to be difficult then. But in terms of spots at the World Cup, they are presented as a World Cup sport with lots of people watching. They are not targeting to one jurisdiction. They are targeting to all the participants all over the world. And no regulator, especially not BaFin, will try to get into that area arguing with FIFA whether something is specifically addressed to the German market. And we had this other question also around whether the passport is now off the table. It never was on the table when it comes to that German regime. That is something specifically German. You apply for the license and you can do your business in Germany. So the important part, and that is very important thing to consider, is really what do I do if I now want to start my activities in Germany? And there it's really all about timing. How important is the German market to you? Do you wait until 2024 and start your MiCA activities then maybe from another country into Germany? Or do you apply for that local regime, use Germany as your central point of or hub in Europe, and then transition into the MiCA regime in 2024? That is really the question every service provider needs to answer himself, obviously also concerning the timeline, which the German license regime will take, 6 to 8, 10 months, I would say. And it's all about timing in the end.
Do you have additional really high standard in Germany?
Yeah.
So it takes so long and it's really cumbersome, and then maybe there are other international market activities which are less strict with the program.
Yeah.
And ways with the MiCA regime you have implemented the passport. So it's there. Why should you go
the Congress and the voting license.
Well,
In person.
Exactly. Well, and you don't need the BaFin license anymore when MiCA is in place. It's a harmonized regime, yeah, and the licensing application, etc., will be harmonized across Europe. But one thing about passports, we have the passport regime in MiFID space, we have it in CRD space, and what we see is it's not only German specific, but also the Western European countries. I had seen things in the Netherlands and also in France, when you have service providers setting up operations in very light countries from a regulatory approach. I'm not mentioning names now, but if they utilize the passport on a cross-border basis, that is fine. But if they want to establish a branch then in the single member state, then the local regulator takes a very close look. In France, for instance, even if the passport is basically home state regulated, so the Estonian rules or Maltese rules would apply. Yeah, the French regulator, for instance, still takes the view that we are assessing the fit and proper requirements of the branch management from a local perspective, just to protect the market. So there will be nuances where regulators can tighten the rules, but under MiCA, everything is pretty harmonized in the end. So it's probably won't make much of a difference. At least I wouldn't expect it. I don't know, Diego, if you disagree, whether you actually set up your operations.
Well, I think sorry, I know we're running out of time and we can have this chat afterwards anyway, but just very quickly, I think that the effect of MiCA, what they're saying is that all the existing patchwork of regimes that exist today need to be, under European law, must be basically withdrawn and give effect to that passporting framework that will apply under MiCA. So MiCA will effectively overtake those patchwork regimes that exist today, with the exception of in the context of AML, where you'll have the base requirements that are set out of the directive. And remember, most of these regimes are implementing effectively the FATF guidance that exists. So, that German regime was meant to implement that, or the Dutch regime or the others. Thank you so much. I think we are at time.
I think we covered even more today with reverse solicitation and passporting. I think we can create another event just to focus and educate market on these topics. So I hope we answer some questions of the audience and we can continue in the private mode. And also people who listen us online, they can send their questions to our speakers. They will be happy to follow up. So, I hope that regulation will develop the right way for the crypto industry, because too much regulation is bad. Not enough is also bad. So we need a balance, and we need, like we discussed, harmonization of the approaches, that governments also take the common approach and for benefits for the clients and for the industry. And thank you for being with us today. We hope you get some new information, and thank you our guests, Clifford Chance and MLL, for being here and actually flying from other locations. Really appreciating it, and we keep in touch, and you can always find our new events on Crypto Valley Association website. Thank you.
Thank you.